What's going on, everyone? The Real earnings call starts in a few minutes, so I'm going to be live streaming it today. Like I said a couple of days ago, I sold all my shares before earnings because over the last 3 months, a bunch of members of the management team were selling their shares. So we're going to be talking about the Real today, and we're not gonna see if I made the right move or not because the stock could still tank even if the earnings are positive. But what we are going to see is if the earnings are good. I just think that a bunch of members of the management team selling their shares during Q2 is before earnings is not a good sign. But it's getting started right now, so let's listen to it. Let me know if you guys can hear the earnings or not.
2020 financial results conference call. At this time, all participants are in listen-only mode. Later, we'll conduct a question and answer session, and instructions will follow at that time. If anyone should require assistance during the conference, please press star then zero on your touch-tone telephone. As a reminder, this conference call is being recorded. I would now like to turn the call over to your host.
I feel like this earnings call should also tell us a lot about consumer discretionary spending and if people are really buying a lot of stuff right now.
Good afternoon and welcome to the Real's earnings call for the quarter ended June 30th, 2020. I'm Paul Beaver, Head of Investor Relations at the Real. Joining me today to discuss our results are Founder and CEO Julie Wainwright and Chief Financial Officer Matt Gutsky. Hopefully you've had a chance to read our press release and stock.
I wish I had time to set it up so that you guys could actually see the screen too, but right now we're just going to be listening to the audio and then I'll give you my commentary after.
During the course of this call, these forward-looking statements involve known and unknown risks and uncertainties, and our actual results could differ materially. You can find more information about these risks, uncertainties, and other factors that could affect our operating results in our most recent periodic report on Form 10-K, subsequently.
Let me see if I can pull up the chat.
And in our earnings release from earlier today. In addition, our presentation will include certain non-GAAP financial measures, for which we have provided reconciliations to the most comparable GAAP measures in our earnings press release.
If you guys have any questions or anything you want to ask me before they get started, go ahead and I'll try to answer to the best of my ability.
Thank you, Paul, and thank you all for joining us today on this call. Since we reported our Q1 results in early May, GMV trends have improved significantly, with May down approximately 19% year-on-year, June down 8% year-on-year, and importantly, we've continued the positive trend into July, with GMV decreasing by only 2% year-on-year for the month. Our GMV recovery prompted us to begin reinvesting in growth in Q2 earlier than we previously anticipated. While Q2 was challenging, the pandemic has been a catalyst for reinvention and innovation at the Real. With the normalization of our processing capacity and the evolution of our supply acquisition strategy, we are now laser focused on returning to sustained growth.
You're awesome too.
With that, I'd like to turn it back to the operator for questions. Thank you.
Ladies and gentlemen, if you have a question at this time, please press star then the number one key on your touch-tone telephone. If your question has
I really like when analysts actually ask good questions, because a lot of times I have questions that I wish I was there to ask, but they never get asked during earnings calls.
Credit Suisse, your line is now open.
Hey guys, it's Michael. Thanks for all the detail in the presentation today. So I want to focus on July for a minute. It sounds like GMV down 2. Can you speak to some of the other underlying?
I work a 9 to 5, so if it's like after hours and I'm not busy, if my work doesn't get dragged into the after hours, then I'll do a live stream. Otherwise, I'll just listen to it like while I'm working, and then I'll make a video and put it out for you guys.
This quarter, is there any reason, be it tougher comps in July or anything like that, that you think there's some headwinds ahead that we should think about that would make that not possible?
I'm going to start, and then I'll kick it over to Matt. We're really excited about July. Really what's happened is previously in Q2, our business was suppressed both by operating capacity at social unrest and also business, not returning to normal. We're seeing that all change in July. Our stores opened in July later than we thought, but now we have all of our stores open. New York returned to growth in the month of July. LA is still lagging slightly due to increased COVID, but we expect that to continue. So regardless of comps last year, what we see in front of us is growth on GMV, on product coming in, which will then in turn lead to growth in GMV. So I'm going to turn it over to Matt.
Yeah, thanks, Michael, for the question. So just to point out a couple of things that were in the shareholder letter. So you're right on GMV growth that improved to -2 in the month of July. That was on supply growth that was plus 3% year over year. So we've returned back to net growth in incoming supply.
Stock is going down after hours, guys. I sold all my real above 15. It's at $14.75 right now.
A quarter ago, and that's obviously a good thing. In terms of how we see it playing out over the next
I'm still bullish
months
on the company, so
obviously
I'm
things
still
are
going to
quite
buy
fluid,
back in.
so
Like I
take
said, I
everything
just
with
wanted to
a grain of salt.
reposition.
But in the
So
immediate
I'm
term,
looking
we
to
see
get
July
in
basically
maybe
staying
the
right
$13, $12
around-
range if
right
that
around July
happens.
level. Because to your
And
point,
then just
we
go
are
long
lapping
on
a
it.
very
And if it goes
strong
lower, I'll
Q3
just
of
average
19, where
down.
our GMV growth rate is up about 10%. So notwithstanding the comping difficulties, underlying that is just sort of steady underlying improvements, starting with supply. We do see a path to positive year-over-year growth in Q4 at this point.
Let me follow that, Matt. With you guys do have a lot of your business in New York and LA.
They're expected to have negative 36 cents per share, so I'm waiting for them to actually tell us what they actually ended up hitting in Q2.
I know a lot of your core consignor base is outside of the city and perhaps not, doesn't have
But
access to
he also said in Q4 they still see a path to profitability, and I think that's widely just going to depend on the landscape of the economy, how people are spending, because the real is consumer discretionary spending. But I think that the audience or their customer base is definitely upper middle class and rich people, so they'll probably still be, those people aren't really too affected by the pandemic, so they'll probably still be shopping online, especially with everything going on. I don't think that they will be going to stores.
For the month of July, despite many of the
yeah, I definitely still like this stock for me personally, because I can't give financial advice, of course, but I definitely still like the stock. I'm bullish on the company over the long term. I just wanted to reposition and see if I could get in at a lower price than $14.
And showed rapid growth in some cities. Again, the only market that's lagging in the month of July was LA, which we do expect to return as COVID actually subsides and people get more normalized in their day-to-day activity. On the UPT, I'll let Matt answer that specifically, but we do have an interesting phenomena going on right now. On the product coming in, the average selling price for us is roughly the same.
I'm not such a big fan of IPOs really, because Neo
are working in that way.
Yeah,
but
Neo is
general,
pretty risky. I agree.
Purchasing
there's definitely risk involved when you invest in a foreign equity. With all the geopolitical tensions going on right now, no one knows what could happen. But I think as far as a company, I feel like they're making good progress. So I'm happy with what Neo's doing, and I'm optimistic for the long term.
Because it has ticked up a little, but isn't at where it was before it too. Our AOV actually gave us one of the best months in July that we've ever had, and that again is a shift in the buying mix.
Mm-hmm. So you don't need to furiously write this down. So I'm just going to reiterate a couple of the numbers that are in the shareholder letter for clarity. The overall supply was up 3%. New York for the month was down 1%, so basically flat. LA was down 11% versus it being down 25% in the prior month, so improving as well. And that left everything else at positive 8% for the month. Some of that benefit does come from continuing strength in the vendor channel, but broad-based across all of the other regions, we are seeing a return to positive year-over-year comps.
Okay, thanks. I missed those in the last. Thanks, Bob.
That's okay.
Dodged that question a little bit. He asked her, how did stimulus affect your results for this quarter? and she kind of said there's only one area that we're not seeing return to normal, basically. And obviously, like, I understand that you're just as a CEO, your job is to kind of soften things up a little bit, but that's a question that even I had. I think I said that already in this live call, that we're seeing people are getting stimulus, so we want to know how consumer discretionary spending will be when people aren't getting stimulus. But I guess it's probably not even a question to ask her, because she probably wouldn't even know. Like, how can they tell where the money is coming from?
I think we're closing the call, and we appreciate all the participation, the good questions.
We're closing the call. We're about to get to the
say,
financial results. This is what we've been waiting for.
Is safety for our employees, but also to cautiously reinvest to support the growth that we really are seeing and expect to see going forward. So, and we look forward to talking to you again after Q3.
Ladies and gentlemen, this concludes today's conference call. Thank you for participating. You may now disconnect.
Okay, so we have our let me mute this. We have our earnings in. Earnings were worse than expected, guys, and like I said, with the management team selling about 2.5 million shares this quarter, that just didn't give me a lot of confidence going into earnings. So I sold the Real for a small profit in the $15 range. I bought the Real in the lower $14 range. I believe I bought in at $14.20. Now let me give you guys the earnings per shares number. Estimated was negative 36 cents per share, and the actual earnings were negative 42 cents per share. So I think the short sellers are gonna have a run with this one, and when they're done with it, I'll be back in, because like I said, I still like the company. They're really optimistic about Q4, and they're optimistic about Q3 as well. So like I said, it's a long-term investment. I'm not thinking short-term. Rarely do I ever take a short-term profit, but this time it just seemed appropriate, and luckily I was right. I was a little nervous about that one, just because like I put it out there and I didn't want to seem like an idiot, but I was going to put the results out there regardless, whether it was the right decision, whether it was the wrong decision. But this time it turned out to be the right decision. Thank you guys all so much for tuning in to this live stream of the Real's earnings call. Really do appreciate you guys. And we'll be back for some more videos. So make sure you hit that subscribe button. Make sure you hit the like button. And comment down below. I'm going to post this video to the channel. Thanks for tuning in.